Hello, everyone, and welcome to the HFM Virtual Symposium. For those of us who have been with us for the first couple of sessions, I hope you've enjoyed them. I think they've been great. For those of you who are just tuning in, don't worry, you've not missed out because we've got one more still to come. I'm delighted to be here with this expert panel who are all going to be approaching this topic of aligning your investment goals with the SEC's regulatory agenda from slightly different perspectives. So before we get into the discussion, it's probably best if we all do quick introductions. My name is Tom Duffel. I'm the HFM US News Editor, and now I'm just going to go down the line and ask for a very brief introduction from my panelists, and I'm going to start with you, Vincent. You're on mute there, Vincent.
That should do it. My name is Vincent Catalano. I'm Chief Market Strategist with an asset management firm here in the New York area, Stuyvesant Capital Management.
Perfect. Thanks, Vincent. And Carlos.
Hi, I'm Carlos Vargas. I'm Professor of Finance, particularly Sustainable Finance at the GADE Business School in Mexico.
Nice. And Harold.
Harold Graham, CEO of Social Impact Investment. It's a platform marrying blockchain to ESG reporting.
Perfect. And Paulo.
Hi, my name is Paulo Macedo. I am from Brazil. I am in São Paulo. I'm in a partner at Fair Capital, which is one of the oldest venture impact companies in Brazil.
Perfect. Thank you very much. Now, given the title of this session, aligning your investment goals with the SEC's regulatory agenda. For those perhaps who are tuning in, maybe not familiar with what's going on, I guess the policy or regulatory level, I'll look to Carlos first to, I guess, just give us a bit of a brief. What's been going on? What's the SEC been saying? And, what do we need to be looking at and preparing for?
Well, it's been a very current topic for the SEC and particularly for the U.S. government as well. We can check some things that have been going on recently, and since March, the SEC has been pronouncing very, very clearly in favor of more reporting, of aligning some criteria into more disclosure, more transparency, something similar to what's already going on in Europe. Some things that have already passed in the last couple of years by the European Union regarding disclosures and other topics related to sustainable finance. Also, the White House has been very clear about their stance in these points. And since Biden took office some months ago, he was very clear that he wanted to get back into the Paris Agreement for the U.S. And that did happen in the first days of the new management. But also, on May, he also disclosed an intention of more disclosure as well, or related kind of reporting. And already it has passed on the House this bill that is actually aiming to open up for more disclosures. The bill actually passed very divided in a very divided House, 215 votes to 214. And still has to pass in the Senate, but we do see some of these steps already going on that direction.
Perfect. Thank you, Carlos. And we certainly will be definitely getting into the weeds when it comes to ESG and how that's going to be impacting hedge funds. But before we do that, it would be almost remiss to not mention the working from home environment. It feels like, every panel is going to have something to say on this because we're now sort of entering into this, for some businesses, a sort of a hybrid type structure. And I know the SEC has been pretty vocal about informational security and operational resilience. So before we get, I guess, into the weeds on some of the ESG stuff, let's just have a quick look at, I guess, what's going on with businesses and maybe impacts with businesses. And I guess what advantages hedge funds might be able to take from this sort of new normal of working. Vincent, I'm going to kick off with you, and I guess put that question to you. How are hedge funds able to take advantage of this? I guess this new working normal.
Well, I think there's going to be a lot more flexibility. There certainly is a significant technological change that's occurring in areas related to fintech and DeFi and all of that, which we can get to at another point in the discussion. But the flexibility is there. To give an example, my son works for a private credit firm here in the New York area. Excuse me. And he basically works from home. Goes into the office a couple of days a week, but they provided him with a whole a suite of services and screens and all of that. And that flexibility has profound implications. We can see it here in the New York area, and I'm not quite sure how it is in Sao Paulo, but I would imagine that it in some respects is going to be similar, that you have a lot of office space that is unoccupied at the moment. And so it's a challenge to the businesses, the real estate businesses, the service providers in those areas. So this flexibility, and even take a look at what we're doing here. I mean, if there's anything that the pandemic, which I don't hear anybody really mentioning, but if there's anything that the pandemic is the area of thank God for the internet, because if we didn't have the internet during this period, we wouldn't have meetings such as this. We wouldn't be able to communicate in the manner that we have. So because of that, the implications going forward is very likely going to be far-reaching, profound, and unknowable. And I guess the key with all of this is flexibility and a strong sense of awareness of what the opportunities and the challenges are going to be going forward.
Thanks, Vincent. And Harold, I know you also have some insights into, I guess how this is going to perhaps impact investment decisions for hedge funds.
Well, the first thing that comes to mind is all the REITs out there that folks have been dumping piles of cash into over the last 20 years, more specifically since the 2008 crisis. And as the real estate market rebounded, there was, additional REIT capital. And then, of course, when the Trump administration put in the opportunity zone legislation, there was even more investment into real estate. So, a great deal of this was commercial real estate that we're talking about. It was considered one of the best securitized investments in the industry. And now that this entire pandemic situation is changing that, I think what we're going to have to see is a great repurposing. I think a great deal of companies are no longer going to want to provide a $50 million building that houses their executives or even, their second levels or call centers, et cetera. I mean, the move away from indoor employment is massive. I can speak anecdotally here. I live in Orlando, Florida. Walt Disney World is the largest employer here in Florida and ultimately one of the largest employers in the U.S. It's a single location employer here of over 250,000 people. And so the indoor office segment of their business, where their executives who basically manage the process, has not gone back to the building. As a matter of fact, they've most recently, the executives that I'm friendly with have advised that they probably won't be going back to the office on a permanent basis. They have some office space that they'll be using for in-person meetings when it's necessary, but ultimately everything's being handled over the Zoom right now.
Wow. Okay. Interesting. Sure, some real food for thought for everyone listening in there with regards to opportunities. Now, again, the big topic, ESG, can be somewhat of a catch-all, I think, for some people, and I'm sure there is some, greenwashing going on in certain parts of the industry. Carlos, I'm going to go back to you just to start on this one, just to give us a bit of a better sense on, the taxonomy. What is actually green? What is greenwashing? Just does that differ globally? Have we got to a global standard? Is that ever possible?
Well, that seems to be on that track, yes, Tom. But it's actually a very difficult thing to achieve. The typical example I like to use here, it's the one that we have regarding accounting standards. Doesn't matter that we only have a handful of them at the moment. We still haven't been able to find a way just to have one single accounting standard for everyone, because obviously it might not be convenient for different geographies, different practices, different everything to just have one basic standard to work with. However, having said that, I think there is a movement towards consolidation. Something we've seen in recent years is that actually some of the stronger providers of ESG data and information, they're actually trying to consolidate somehow to try to make their standards also translatable into other standards, etc., because that provides some value. But still, we see a lot of differences in the different standards. Why? Because in essence, most of those are typically proprietary. And those people that own the standards, they truly believe the methodology they're using is the best one to reach the results that they actually sell. It's also a business for them to work with this information and actually provide value to people that use it. But once you start to compare among different providers, you actually see that they're not always congruent. And that's also a limitation, and that's also something that we need to work with. What we do see at the moment in the European Union with the taxonomy, it's actually this attempt to better define what should be considered green or social or governance related for the criteria, how the criteria needs to be met. But basically, starting with the first step, what's the definition? What should be green and what shouldn't be green? And actually try to avoid greenwashing, because in reality, this is an industry that it's being worth a lot of money. We can see some numbers. I was checking Bloomberg the other day, and they were saying that for 2025, which is just around the corner, ESG investments are expected to reach $53 trillion. $53 trillion. It's really a lot of money. And there's no way those regulators are going to avoid the opportunity to actually put their hands and make their say on this regard. But nevertheless, right now, most of the information is actually held privately. So there's going to be some changes there in the near future.
Perfect, thank you. Paulo, I'll go to you next. Given you're based in Sao Paulo, it would be great to get, I guess, the emerging markets perspective on ESG and on this topic, and I guess also from the recovery from the pandemic, how that I guess has probably differed from elsewhere, and maybe what opportunities or risks that represents.
Yeah, thank you. I'm a little bit concerned about if you are not going to a like recover from the pandemic. I mean, with the developed world, because they have more fiscal power and so on, they are more able to sustain the economy, and I mean they are back on track basically. And the emerging markets there, I mean the support that they were able to provide for the economy were like more or less 30% of the average in the developed country, and that has big implication for the ESG and investment in terms of transforming the economy, because those investments that we are talking about, they need also government support. They need this kind of shift in terms of infrastructure investment and so on. And if you have this situation right now that the emerging markets have with less fiscal space, maybe they will also fall behind in terms of being able to catching up of in this resetting or rebuilding the economy. So that's something that I'm really concerned about.
Harold, I'll take your perspective on this next in terms of, I guess, climate and ESG related risks.
Well, that's an interesting question. I think Paulo hit it right on the head. I'm not sure I could add anything to it.
Okay, great. Well, Vincent, how about you? I mean, do you have a perspective on ESG and climate related risks?
I do. One area that our clients have been investing in for quite some time has been in the area of clean water. And that is something that is, I think to a large extent, is underappreciated. And so there are ways to participate in that And it just seems that, the need for clean is quite significant and will continue to be so. And clean water doesn't mean solely water that we drink. It's water for industry. Water needs to be clean on a whole range of levels so that this way business and life can go forward. And given the expectations that the population of the planet is going to be approaching $10 billion, if not by the middle of this century, certainly by the end of this century, that's an enormous stress on the entire system. So water sits right there at the top of the list of things that need to be done.
Thanks, Vincent. Carlos, I'll go to you next. Just picking up on the stat that you mentioned, the 57 trillion that's to be invested in ESG. But we're also, obviously, at the start of this conversation, we're also talking about policy and regulation and regulators. I mean, ultimately, what's driven this change? Is it policy or good business sense? What comes first?
Well, I think it has to be business sense first. That should be the first one typically. But nevertheless, we do see that both are moving towards that. I think in the case of sustainable investments, it actually happened from the market first. It was really the investors that started to show their interest on this regard. Those asset managers that started to cater for those interests, and that's how it started to evolve. We'd still see green bonds, for example, as well, also growing over $1 trillion already, and only last year it was like $300 billion again. So it's areas of interest for investors that are growing rapidly, that are raising a lot of interest, particularly because we have a lot of investors that are entering into the market that are just new generations that are more interested into these kind of topics, that are more engaged. And that has pushed part of it together with all of these like special situation that we have at the moment, that after the pandemic also people were more concerned about different things. They started to reorganize their priorities, as you were mentioning with this question about working from home and how all of this has changed. That also permeated into people also trying to understand what their real priorities were. And that's how also it gave a push as well to sustainable investments from last year into what's already been going on for these first months of 2021 as well. So yeah, I think it's how it's been evolving. On the side of the regulators, I just think it's a natural thing that they'll try to get in, and they'll try to control and actually design how it should be done. However, for the regulators, they also have to be cautious, because if they do it too strictly, they actually damage all of these dynamic that it's already going on. And I don't think they're interested in doing that at the moment. They can use any help they can get just to keep the economy moving. So what they have to do is, yes, to keep some guidelines to work with, to keep some basis, but they cannot overregulate it. If they overregulate it, they might kill it before it starts, and it might be counterproductive. But I do think at the moment, the kind of discussions that we have, at least in the US, and the ones that we've had in Europe over the last couple of years, they're aligned to that, basically to determine what the basic concepts should be, what the general guidelines should be, but not to regulate it too much just yet, because you first have to see what the potential is and let it grow for a little bit.
Mm-hmm. The next big topic that we're going to move on to talk about, which has been another priority for the SEC, has been sort of fintech and digital assets. But there's a little bit of a segue here between sort of ESG and fintech. And I know, Harold, I think you've got some interesting takes on, I guess, blockchain and ESG reporting and the impact of that.
I'd like to, if you don't mind, I'd like to just add a little bit to what Carlos said about the previous topic before I go into the blockchain piece. I think that everything that Carlos said was 100% on the money. just that, we've got this great idea, which is represented by ES&G. We had a great idea 25 years ago, which was represented by a hedge fund, the concept of a hedge fund, the fact that managers could take capital and, with the 2 and 20 model. And I know it was a little higher in the beginning, but, and it lived out its life, and it was regulated and segmented. And now that's kind of over. And so it's what's next is really the real question in regards to investment. And I believe ES&G is the answer to that, especially because the younger generations are more interested in doing good than they are necessarily in making pure profit with the money that's being handed down to them. And I don't mean to say that they're the only investors in the marketplace, but you get what I mean by that. So the fact that we've got this great concept and we're moving it forward is wonderful. Carlos hit it right on the head in that we don't want to cut it off at its knees by insisting that everyone has to live by an impossible standard, but we do have to have standards. And we also have to have reporting. Otherwise, anybody can be added to an ES&G fund, and who cares what they do? As long as they say they're doing the right thing, it's fine. And so, that will ultimately also provide the ES&G demise. Because, if we're not providing any results from this massive investment into companies that are supposedly doing good, in other words, if no good ever comes from it, it's going to die. There's not going to be any reason to have it called ES&G. It'll just be investing. So, it's wonderful that we're having these discussions around regulation. Where blockchain comes in is there is built-in accountability in blockchain. You can't put a record on a blockchain file and then go back 6 months from now and delete that record. We never said that, in other words. So you can't do that on the blockchain. The minute you change any file on the blockchain, there's a record of it, and there's a record of who made the change. So there's also a record of who viewed it. So you can't, as a user on a blockchain platform, you can't view that file and there not be a record of you having viewed it. So we believe, my company believes, and ultimately, we're hoping that there's a movement here that we're calling DeSci, which is decentralizing social impact. We're hoping that there's going to be a movement toward reporting using the blockchain. It's a great tool for providing accountability and transparency. And we believe that'll generate more liquidity to the marketplace. And that's what we're looking for.
Perfect. Thanks, Harold. And I guess moving into that conversation with regards to fintech, I'll go to you now, sort of Vincent, in terms of, I guess, best practices that are emerging in the space. How are hedge funds able to take advantage of these newer technologies, and again, not fall foul of sort of any regulatory scrutiny that the SEC might be putting them under?
Well, the main thing that I would emphasize in regards to fintech and DeFi and blockchain is basically 2 words: wake up. Realize that this isn't a fad, that this is real, and it's coming. And it's not just coming; it's here already. And if anyone attended the SALT conference or watched it last week, it was a DeFi fintech love fest, a blockchain love fest. And so we're all familiar with the phrase "too big to fail." How about too big to stop? Okay, regulation is coming to this field. We don't know what that regulation is going to be, but the regulation some kind of an impact on a number of the weaker links in the chain, but it's not going to shut it down. And anyone who is hoping that this is all going to get shut down by regulation because their traditional business model doesn't incorporate this, or they don't have a way of taking advantage of it, you're whistling past the graveyard. This stuff is real, it's happening, and it's only going to get more so. So the issue is going to be what kind of regulation makes sense, sensible regulation that will lead to enabling this field that is very large, I would say in many respects comparable to the dot-com era. And we know what happened there. Many dot-com companies faded away. They evaporated. But where are we? Well, right now, here we are. We're on this. The Zoom doesn't happen. If the internet doesn't happen, if the dot-com era doesn't happen, and DeFi and everything that it portends, and blockchain that underpins it all. I mean, if there's one best practice, it's have a dedicated effort to understanding what this means as a competitive threat and as a business opportunity. And if you're doing business the old way, okay, this is going to come for you in a big way, and you'll find the business evaporate over time. So it's a double barrel impact. One as a competitive threat, and the other one as a business opportunity. And whatever resources you can apply to it, I would say please do so. I'm going down to DC in a couple of weeks to meet some people from the Blockchain Association and a couple of others in the venture capital field, and we're going to be exploring different ways of developing a deeper understanding of what the opportunities and the risks are in the fintech DeFi blockchain arena.
Thank you, Vincent. I'll get to sort of Paulo next. I mean, is this an area that you guys have paid much attention to? Is this something that you guys have been focused on?
In terms of this fintech and blockchain opportunities, you mean?
Yeah. Yes.
Yeah, I mean, Brazil, it's flourishing, especially the fintech space, because Brazil has a very concentrated banking market. There are only 4 big banks in Brazil, believe it or not, that controls up to almost 90% of deposits and loans. So there is a big space in fintechs in Brazil, and there is a big fight going on. We had the last of couple of years 2 big YPOs in Brazil of fintech companies, and there is a next YPO that's rumored to be of a digital bank that they are maybe going to be priced and valued as the most valued bank in Brazil, even that is more valued than these 4 big, like Bank of America kind of banks. So there are a lot of movements in Brazil because of that market. Of course, that all disruption is most profitable where the market is concentrated, right? So it's a very, very concentrated space, and fintech in Brazil is going to be a major player. I think that bigger than the US. The US has a much more deconcentrated financial market than Brazil.
Perfect. Thank you very much, Paulo. Unfortunately, we're fast running out of time with this discussion, and sort of before we leave, before I let the panelists go, I'd like to do a little bit of crystal ball gazing. Let's look into the future a little bit, do a bit of forecasting, because today we're talking about a changing working environment. A new world of working. We're talking about ESG, and we're talking about fintech. We have this same conversation in 12, 18 months' time. Is it going to be these conversations that we're still having, or are we going to be looking at something else? What's on the frontier that we're going to be talking about, and is going to be sort of top of mind? I'd love to get everyone's take, especially if they're different. So I'll start with Vincent first, and then we'll just go through the panelists.
Okay, were you directing that to me, because there was a lot of fading in and out? I apologize.
Sorry, Vincent, were you? There might have been a bit of static there. So I guess the question is, what should we be talking about in 12, 18 months' time? Is it going to be fintech, ESG, new working world, or is it going to be a completely different topic that's on everyone's mind?
I would think that it's going to be those topics and a couple of others more in the societal level. I mean, we're entering into a remarkable period of both incredible opportunity, incredible growth, incredible potential, and incredible risk. And so I would say that perhaps those 2 topics I believe will still be there. I think the other one is potentially in the healthcare area. And I mean, the pandemic has shown us that this interconnectedness has led to, the expansion of disease, and so there's a whole health care issue that I would think that would also elevate. But wow, the list, those two plus about another 14 others, so something along the lines like that.
Perfect. Thanks, Vincent. And Carlos, your take on this same topics or something new around the corner?
Well, I do see a couple of things happening. As I was mentioning before, I don't see any sort of possibility of having one single criteria for ESG, but I do see stronger ESG criteria. That's what I see. I see more consolidation. I see a handful of those ESG data suppliers or in different areas in the world, perhaps for China, for the European Union, for the US, for other regions, etc. And that kind of consolidation I do see happening very fast. And that's one movement. I think it's not going to take more than a couple of years just to see it shape. The other thing that I also see very rapidly happening in the last couple of years is the overlapping of technology and sustainable finance. All of these ideas regarding blockchain and how to use it for proper implementation of reporting, for ESG criteria analysis, for actually noticing how data can be useful for the purpose of analysis. It's just happening very fast. The only criticism, the real criticism that we hear around it many times, it's the one regarding energy consumption. And that part of energy consumption can be easily optimized as technology evolves. So I don't think it's going to be something stopping blockchain being a significant piece into the puzzle of making sustainable finance more relevant and to grow as it's been growing in recent years. So more of that overlap of fintech, blockchain, and sustainable finance.
Thanks, Carlos. Paulo, what are you looking at with regards to the future? That's going to be top of your mind.
I think that I hope that we're going to be discussing the last couple of years, as we have the nutrition facts in food. When you buy a yogurt, we're going to have some kind of ESG facts. I mean, how much carbon that yogurt has produced to be there, how much wage has it paid, how much tax, and how much, and I think that's I would say that I'm confident that the U.S. It's a good thing for the U.S. because that's a good thing for free and democratic societies. That's where that concept will flourish the best, where you have information available to consumers and so on. So I think that ESG overall is a good thing for the U.S. in terms of the competition with China.
Perfect. Thank you, Paulo. I really apologize because I've let this overrun massively. So I hope I've not made anyone late to their next meetings, or they're not desperate for a coffee. But just very quickly before we close, Harold, quick one-liner from you. What's coming next?
Real quickly, bottom line is I think that Vincent and Carlos both hit it on the head in regards to the SEC. They're going to be very gentle about their initial regulations. They are going to be required, but it's going to be gentle. And I think that Paulo was also correct in his statements. But really what I think we're going to be talking about in 12 to 18 months is we're going to see what comes next in regards to new technology that is blockchain based. Blockchain has the ability to disrupt almost every industry. And I'd love to see how this real estate market's going to shake out once we figure out just exactly how much of this commercial property is going to be re-inhabited.
Perfect. Thank you all so much for that excellent panel. Really appreciate your time, and I hope everyone has enjoyed watching that. Cheers all.
Thanks, Tom.